Goldman Sachs getting downgraded today over at Oppenheimer. The firm says the M&A rebound is likely delayed or even canceled due to fears over tariffs and what they're calling a fiscal detox. Steve Weiss, you own Goldman.
I do, and I can only imagine that that analyst either started this week or was on vacation for last month. There's nothing in there that's new. That's why the stock is lower. And time to downgrade it was obviously a while ago. So at this point, we're not talking about, about the M&A cycle going away. We're talking about a delay in it. We're not talking about equity issuance, the IPO market going away. We're talking about waiting for it to emerge. So it's probably unlikely that that is in the next 6 months. As you remember, the forecast by most bankers, at least the ones I talked to, most of the ones we've heard publicly, was for the second half of 25. So we're not there yet. We weren't expected to be there yet. Now that probably gets pushed out for 6 months or so until there's, again, the rules of the road are laid out. I think Goldman is
one fair point.
Value.
One fair point. You're really focused on the M&A part. I don't know this guy's vacation schedule, but you're focused on the M&A part. But he also hit on the fact that investment banking has been muted, expecting investment banking to be muted for the next 3 quarters as well. I mean, isn't there a point to be made there?
Well, that is the point. That's M&A. M&A, the merger market. That's part of investment banking. I think the bigger issue and the bigger risk, not with Goldman, but with the other banks, not with Morgan Stanley, but with Citi and B of A, do companies not borrow? Does the lending growth slow down or reverse? Do defaults pick up? All of that is really at play here, depending upon the slowdown in the economy. But the M&A market, we were waiting for rates to come down. Don't forget when you forecasted, an M&A market coming up from the all-time depths of it, it was because rates were going to come down. That makes a lot more acquisitions more viable than when rates are at this level or even higher. So what he's talking about is a 3-quarter delay. As I just told you, it was going to be a 1-quarter delay. Now we're going to see that pushed out. So again, it's going to happen. It's not just going to happen in what was predicted 6 months ago.
All right, so Goldman downgraded. Goldman also downgrading a number of other banks, trimming Bank of America's price target from 54 down to 50, Citi's price target from 90 down to 80, also JP Morgan from 308 down to 288. Both of you guys own JP Morgan. What do you make of the call?
I very much like the financials here. And, in any sector that you're going to invest in, you have to be in the creme de la creme, which is JP Morgan. So that's kind of a given. I mean, I think the Citi call is more interesting to me because here's a company that at the last quarterly update said they're buying back $20 billion of shares, and that's about 15% of the market cap outstanding. Currently trading at about 80% of tangible book value. That's immediately accretive. My hope and frankly my expectation is that they're doing that buyback in an accelerated fashion so that when we see the next quarter's results and the quarter after that, we're going to see a lower share count and a higher earnings per share. Add to that lower compliance costs as regulation goes down, lower capital costs, and whether it's Citigroup, JP Morgan, Goldman Sachs, or the sector, I think this is where you want to be.
So Rob, we're going to button this up really quick. Morgan Stanley announces some layoffs today, about 2,000 people, but no financial advisors. What do you make of it?
The key point, no financial advisors. 70% of Morgan Stanley's earnings come from their wealth business. So, yes, M&A is slowing down, and that is kind of the icing on the cake. But the wealth management business is strong balance sheet, 3% dividend yield. That's growing. I like the stories. They've come off. Morgan Stanley's down 15% for the month, 5% for the year. If you're going to buy these that went into a huge run at the end of last year, this is the time to buy the Morgan Stanley's JPs of the world.
All right, got to leave it there. Morgan Stanley shares actually up about 1.25% right now.